Alright, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers pushed ES up to the 42 quarter naked VPOC and couldn't really sustain at those higher prices and then rotated all the way back down. At this point, if we look at the previous two sessions and the overnight session, we can see that ES has been basically coiling and just balancing in a range and is now pretty much set for a directional move. Now we're going to be using 34.75 to 36.75 as the micro bull bear zone, and as long as that zone holds, buyers can still maintain control and we can rotate higher and then potentially break to the upside and test the all-time high and even set new highs in this session. If you saw TF in the overnight session, it actually already made a new all-time high. So usually this kind of pattern either plays out to the upside where we get the directional move and ES catches up to the other markets, or in the other markets it can be kind of an exhaustion type setup where it makes the move in the overnight session, exhausts, and then in the day session we actually get a failure. And because now we've balanced in this range, once we get the failure, we get a little bit more follow through. So today if we break 34.75 to 36.75 on any kind of strong volume or momentum, then we will have to be careful at the support zones below. If we had gotten the move yesterday, it would have been a very easy long setup, and yesterday we still had that strong bullish bias intact. But at this point, either this micro bull bear zone holds, we break above 39 quarter, and hit the naked VPOG, test the overnight highs, perhaps rotate a little bit, and then continue higher. Or if we break to the downside, we can still technically get buyers at 30.5 to 32.5, but it would not be as strong of a market at that point, and we would have to see ES get back above 34.75, get back within the recent range in order to have a shot at moving higher. So today, because the market is set up for a directional move, we have to be careful on fade setups, right? So 30.5, 32.5, even though it can attract buyers, we have to be careful there. It's not as strong of an idea as it was yesterday. And if if a downside break happens on stronger momentum and volume, we could quite easily go down to the 23 quarter to 26 quarter before we get any kind of decent bounce. And that's why I think this 34.75 to 36.75 zone is very key for buyers, and that's why I think that it's a zone that really needs to be defended and has a high probability of being defended for a upside move. 39 quarter, very key level on the upside. We need to break above that to confirm the bullish bias, and if we fail there, if we just have a real hard time breaking above it, then that would be a red flag and an early warning sign for the buyers that perhaps the market is not as strong as we thought. If you're looking at the other markets, ideally we want TF to hold above 67, the 67 to 68 area. And in the event that TF breaks below that area, the next support area in TF would be around 64 to 65, and we could get some buyers active over there. On NQ, so far we've been balancing above the 89.5 breakout area, and we've just been balancing in a range, just like the other equity markets. And we'd like to see NQ break above the 36.02 high volume node, and that would be needed to confirm the buy side in control in NQ. So keep an eye on the 35.99 to 36.03 in Nasdaq, and if we can break above that, then again that would be a confirmation of the bullish bias, and ES could quite easily test the all-time high and even break above it and head up towards 51.75 to 53.75. And right now we are seeing decent volume in the markets in the overnight session, so we definitely don't want to be fading too much today. We want to be going with the momentum, with the overall direction, and the focus will be on the long side above the micro bull bear zone, targeting 45.75 to 47.75, and then potentially 51.75 to 53.75. So those were the main trade ideas on the day. Let's see how well we hold up off the open, and we'll take it from there.